charts. Okay, so I'm just for the pound yen with the slow week that we've got today, that we've got this week, I should say. I'm looking for this to drift back into this area here. This is a weak start to this chart, the pound yen. We might see some pickup as we get into the Asian session, so I've got to be careful of that. But on the whole, I'm just looking for this to drift lower. I hope this drifts back to the Friday low, which would be nice. Which would be this. There's a lot of support down here, 179.50. So this week, the main data is Fed budget day on towards the end of the session on Wednesday, and then UK inflation on Thursday. So with UK inflation projected to be close to zero and potentially, who knows, maybe even a negative number, I think this may just, I'm hoping this is going to drift lower and then I can pick up a support level down here and then hopefully buy that and see that return up to these upper levels. But at the moment, with that sitting on the 200 EMA and inside the box, it makes it a little bit difficult to call. What are you guys seeing on that? You seeing anything different to me? Of course, what we could do is just throw a little pop down to 180 tomorrow, see a lot of buyers come in and end up above the box even tomorrow. So, but with the RSI just middling and such a weak start to the week, I would just sit tight and let that come to me. Sticking to the yen pairs, US dollar yen, that just came out of the box and like the pound yen, just come back in the box. So again, with this one, I would love that to come back to the top of that box, 118, 117.80. Because and you quite often get that with a big move. When you get a very aggressive move to the upside, as we had on non-farm payroll, it's not unusual for that to do a complete retrace down to the 750 mark. So I'll be keeping an eye out for any drops down to that area there. And it could be that the budget day on back end of Wednesday's US session does that for us. Okay, let's look at the dollar pairs now. As we're on the US dollar, let's go to the pound dollar. Pound dollar, I've got this main sort of line in the sand here at 152, which we came down and tested today and held. Again, very sideways. We're under the 50 EMA. We have got we are in a big downtrend. So what we've done is crashed into that trend line. So the trend line is taken from the highs of July 15 and a retest of December 16. So far we're not closed above that trend line. So so we're stuck above that support under the trend line, so we're stuck in that apex with UK inflation just around the corner on Thursday. Euro US, nice little 80-90 point short in the Euro session, which took us down to the bottom of that box and has helped closed us above it. So I'm just steering clear of this one at the moment and just concentrating on the US dollar yen and the pound yen. But that, if we hold like that into the close and we can start closing a little higher, that could easily retrace the top of that box and potentially back up to that 50 EMA and that resistance up there. Been watching the pound Aussie and trading the pound Aussie at times. Let's have a look at where we are now. Let me tidy this one up. So you can see we have hit the top of that channel. if I put the fibs on this move down here, you can see how we dipped under the 50%, formed a really nice base, formed a W pattern and shot up. So we had a big move to the upside here. This was, you know, quite a deep pullback into a support area. Well, that had a good run, went sideways, got very choppy, but once we dropped under that 50% and picked up, that got the buyers interested and sent that scurrying over a period of a couple of months, November, December, and this was very clean down here. So we had a leg 1, a leg 2, and we've got a leg 3. So now if we get an A-wave correction down to this 190 or potentially just 192, I'm currently just under 195 with a bar that is going to engulf a lot of second half of last week's price action. So I think that will drag that down. If we come and sit at 192 or a lower level, anything between 190 and 192 is an area that will get me very interested and get me involved in that. So I will keep you posted on that, but in the meantime that is just drifting down nicely. Pound CAD, has some CAD data today, so that's dragged the pound down in its favour. This was a great chart. Again, similar to the pound Aussie dollar. Let me tidy this up. Lovely double bottom. Push back into resistance. Again, this is a typical Forex box like behaviour. So we're in a big box here throughout 3/4 of 2014. Then we drop into this box here from August last year to January this year, and now we are in, having broken out from a very nice 2050 EMA cross on the back of a nice daily hammer off 178. We are potentially forming a nice bull flag. So the next leg could come from a drop to 186. So I think 186 is a key area for pound CAD. Excuse me one moment. Okay, let's have a look at the indices. What are you looking at the moment? Anything, guys? Yeah, so this Dow daily crashed into this trend line, just peaked above it, hit resistance, and has found itself drifting lower. So we've got a few things this week. A, it's very quiet on the data front. B, we've got the Fed budget on Wednesday, so potentially a lot of traders sitting on their hands, staying out of the market until we get that budget out of the way. And of course, I've got a potential Grexit, Greeks exiting the euro, and of course Ukraine negotiations going on. So a lot of uncertainty is creating a little bit of an uncertain market. Nice wedge. As long as the Dow can hold, well, particularly 17.5, but 17.6 is the next level of support. We can come down and retest the support level from the non-farm payroll breakout area. We could get back up. In the meantime, that is just weak to sideways. Gold. Got hit by a very buoyant non-farm payroll, so which saw dollar strength and money flowing into assets away from safe havens. With and with low inflation threat, this one is just not getting bought at the moment. Obviously, we're back to quite a nice fib area. So 1240 can hold. We might, and we start closing about 1250. That could go and revisit the highs because we had a big swift move up here. This could be another one of those big swift moves that drifts back down to the original breakout area, holds, sees more buyers come in, and sees that retrace. So wherever you get big moves like that, always keep an eye out for retraces and for another leg up, because that's had one big leg, two big leg. So if we hold here, we could get another leg out of this gold, which would keep the pound dollar pegged down. Okay, and let's look at oil. Oil's had a reasonable day. So I was hoping for a push down to 47, but at the moment that's, where are we? We're just coming up to the pit close. At the moment, not doing an awful lot as we head into the pit close, which doesn't bode well for the rest of the week. If we close there, I still think we run the risk of, well, I suspect we might see 55. That'll be the next pivotal level up there, assuming we can hold this 50 EMA. Otherwise, if that gets a bit tired, I think we'll retrace. We've just rolled over into this contract, into this the February contract, I think. No, it must be March contract. Silly me. We're in February. Silly me. March contract. So it's a relatively new contract. So I wouldn't be at all surprised to come back at least 49.50, 47. And if that is going to get a push, typically this is a good time of the year for oil. Typically, what with the northern hemisphere still being in winter and heading towards the drive season, etc. This contract obviously doesn't affect the drive season, but we do tend to get a push into resistance this time of year. Okay, so with this quiet week, looking, like I said, my focus for the week is very much on the M pairs and seeing how this one behaves when we drift back. And that is with a nice spring out of that. That will be that support level will be a 50% retracement back into the box. So 178, 179 may get seen again. Okay, let's just talk about, let's come away from analysis on the bigger time frames, and let's just look at some intraday levels. Obviously I've been watching this one very closely, so you can see I've marked this one up. So the key thing for intraday trading last week on the Tuesday was the way in which we looked at this level here. So we had a double bottom here on the 25th of Jan, and that gave us a move from the 25th to a high on the 28th of 580 area roughly to 940. And typically, when we came down to retest this area here, we saw a lot of topping tails here. breaking underneath this level here. There's a little apex here, came out of it, retested some of the resistance areas, kept making lower highs, put a reversal bar in here in the Asian session on the 29th, and then toppled down, pulled back to the 50 EMA, toppled, just nicked underneath this support. So what you can do is just take nice low risk entries down here and go, take very small positions and just get your stop underneath the lows here, and then just see what happens. And then if you are building, if you're getting some points in your account, you can move your stop up and then start taking additional trades. So you can forget the initial trade down here, lock in profits on the initial trade, and then use the equity that you've got down here and locked in to support a bigger position here. But just don't go crazy. Just don't, make sure your position size is proportional to your account at all times, and increase your position accordingly, and just manage the trade. And that's the secret of trading, if there is such a thing as a secret. Just take a low risk position, wait for confirmation, lock in profits, and just add to your position, but stay within your account size. And then just watch out for the key pivotal levels. Take some profits at resistance. You can go all out or just take some profits, whichever you prefer. No harm whatsoever in taking all your profits out of that with divergent RSI up here. And then if you see this holding a day or two later, pick up some more trades, pick up some more positions, and then see where it goes. This is the next level of resistance. So if you're in that for a couple of days, that gives you a nice leg up to this level of resistance. That was support before non-farm payroll came out. That shot up. Everybody got out ahead of the weekend, and here we are left drifting lower and just sitting above the 180, wandering, waiting to see if that can either hold or if we can see further levels. So this weekly pivot there, 179.50, will be a complete retrace of the non-farm payroll move, which will be a lovely opportunity to get in, assuming it holds, assuming you've got confirmation that's going to hold. So the story in this one was very, very clear. The clearer the story, the higher the probability, the more money you're going to make. Okay, that was a nice little double bottom here. Confirmation up here, held the 50 EMA. Let's just look at that one a little bit more closely. 60-minute chart, nice stopping bar on the 50 EMA at 10 o'clock, 11 o'clock on the 26th, and the rest of the day that moved up and gave you a move from 730 area to 880, 890 area on the same day on the 26th. Alright, not an awful lot more to say, seeing as the markets are relatively quiet anyway. But that weekly pivot and a retest of that could happen. Although what we're effectively doing at the moment is, this was resistance here on the 5th. We bust through it on non-farm payroll. At the moment, we're just coming back and sitting on that. And we've got a nice little hammer here at 2 o'clock, which gave a small move. So if we're going to hold this area here, we may have to, anybody who wants to get back in, may have to buy that high. So when I come back to my desk tomorrow morning, the first thing I'll be looking at is where in relation to that support and those key pivots is that trading. Is this likely to hold? And is it worth buying that to see if we can push that up? Any questions? Let's just look at the 60 minutes on the pound Aussie dollar, because this was interesting last week, because we had the Aussie rates last week, and 192 was a key. Even if you take the fibs out of the equation here, 192 was a fantastic area. So we came down and held it at 6 o'clock UK time on the 2nd. Came and tested it overnight when the rates came out. Came back to test that US session support on the 2nd of Feb. And then rate decision came out. They dropped the rates and up that shot. And the very next day, 193.40 held, and then it ran back to the highs of that after that post rate decision. So very technical move, hence the reason why I'm watching this one very, very closely as well. I'm basically very bullish the pound, but we've got to get this inflation out of the way first and then see where we are going to land. But even this 195 could hold with the gold week. We could find this 195 holding, which will give us a nice push into 197 plus. Well, if you look at the big picture on this one, let's look at the weekly on this. So we've come up against this resistance from the low of May 09. We actually fell quite hard in August 09 here. So you can see why that's quite an important area, why it's hesitating. Because that's quite an important level. So I've had 3 weeks of buying on the back of this stopping bar, week beginning 12th of Jan. So a nice pullback to 193.20. And if that holds, that would be a very nice entry. We'd need a big push to get through that high and start heading for 200. But so just keeping a very close eye on that. While we've got the weekly up, let's look at the pound yen. So I had 2 weeks of buying on the pound yen. We're just holding 180.50. Like I said, I would like to see some lower levels, but not sure we'll see it. I think we probably will. If you look at the 50 EMA on the chart, we're sitting on the 21 EMA at the moment on the daily, but just hoping that that trend line underneath this pound yen is going to get tested before that one pops up. Okay, so that's a little bit of information about how I've marked up my intraday charts and what I'm looking at, what I'm expecting but don't know what we're going to get yet. But so my scenario planning is just anticipating a drop back into that trend line, having broken it on Friday. Okay, any more questions? Let's just see where the Dow is on an intraday chart. I can see my fibs. So it's gone back down to the bottom of the fib zone. And at the moment it's getting bought. So this key breakout area from here. Non-farm payroll was here. This big bar here. Pushed up, dropped back down, and then ran up. Here looks a little bit lost at the moment. Although we have tested that Euro session low. No, sorry, it was the lunchtime data low we've tested. Okay, I'll leave it there. I'll stop the